Buying a home is undoubtedly one of the biggest decisions any American is going to make in their lifetime. But where do you start? As someone who helped multiple people buy homes, I wanted to share some important things I think you should consider before making that huge purchase. If you clicked on this video, I'm sure you know America is currently in a housing crisis. As of Q2 of 2024, the median sales price of a home in the US was a whopping $412,300. That's almost $100,000 more than the median sales price of a home in 2020. And if you live in states like Massachusetts, Hawaii, or California, that price doesn't even seem realistic. What's causing these high prices? The main culprit here is
Inflation.
over the past 4 years, the cost of living has skyrocketed, everything from gas, groceries, and honestly, wages really haven't kept up, making houses more expensive than ever. Now let's talk about interest rates. As of recording this video, the average rate for a 30-year fixed conventional mortgage is in the low 6% range. The average rate for an FHA loan is in the high 5% range, and the average for a VA loan is in the mid 5% range. So what exactly makes that so important? It's two words: supply and demand. Honestly, we're seeing a lot of people with COVID interest rates lower than 3% really reluctant on selling their homes. And this decreases the supply of homes on the market as people aren't moving state to state or selling their homes because they don't want to lose on that sweet interest rate. Now that interest rates are dropping, it's making it more affordable to buy, making the market more competitive, and increasing that demand. When buying a home, it's important to make sure you're not only financially ready, but mentally and emotionally prepared as well. Financially, prioritize paying off any high interest debts you might have. These could be credit cards, auto loans, personal loans, or private student loans. Not only do these debts strain your budget, they also make it more likely that you won't get approved for a mortgage due to something we like to call DTI, or in other words, debt to income ratio. In simple terms, DTI basically means what percent of your pre-tax income is going towards paying off your debt. Let's break it down. If your household pre-tax income is $100,000 per year, which translates to $8,300 per month, and you have monthly debts totaling $1,800, your DTI is around 22%. Here's the thing, every mortgage lender is different, but for the most part, they won't approve you for a mortgage that's more than 45% of your monthly pre-tax income. In this case, that would mean the maximum monthly mortgage payment that you qualify for is just shy of $1,900. And in states like Massachusetts, that really doesn't get you a lot. In the same situation without the debt, you would potentially qualify for a $3,700 monthly mortgage payment, which offers a whole lot more flexibility. Emotionally, buying a house is a very stressful process. It's a huge investment, and more than likely, you won't get the first house you put an offer in, maybe even the second or the third. The market is competitive, and if you like a house, there's a good chance that there's 7 to 8 other people that like that house just as much. Moral of the story here, don't get too attached to the first house you see. Now that you're prepared, you're probably wondering, when is the best time to buy a house? Have you ever heard the saying, the best time to buy a house was 5 years ago? Well, they aren't wrong. Historically, home values have continued to increase year after year, and the earlier you get into real estate, the better. This allows you to take advantage of the lower home prices now and get those potential equity gains. But then some people ask, what about the interest rates? What about the market crash? And the truth is, nobody knows exactly what's going to happen. We probably won't see as a dramatic increase in home values as we saw over the last couple of years, but home values still do tend to rise historically over time. And if you're financially and emotionally ready to take that plunge, why don't you do so now? You definitely don't want to regret it. Unless you're fortunate enough to buy a house cash, then you're probably going to need a mortgage like most of the people watching this video. I'm not here to go over every loan type. I think you should definitely reach out to a mortgage lender or broker for that. But I'm here to offer some quick advice. Try to save 20% of the home's value for a down payment. I know this might not be feasible in all markets, but try to save as close to 20% as possible. While FHA loans require as little as 3.5%, VA loans require as little as 0%. I really think you should at least try to put down 20% if you're able to. This will help you save on the amount of interest you pay over the life of the loan. When you apply for a mortgage, you'll receive a pre-approval letter. This is going to give you specifics on exactly how much house you can afford and your probable interest rate. Most importantly, Shop around with different lenders for the best interest rates. 3 to 4 lenders at a minimum. Research from 2021 has shown that home buyers can save between $600 and $1,200 annually, or up to $36,000 over the life of the loan, just by applying for mortgages with multiple lenders. That's a lot of money. I know banks can be intimidating, but don't hesitate to put that extra legwork in. There's been a lot of controversy surrounding real estate agents and realtors over the last couple months due to all the lawsuits and allegations that have been in the news lately. But hear me out, I still think real estate agents play a crucial role in the home buying process. Can you imagine making the biggest purchase of your life without somebody that's helped multiple people do it before? Realtors bring valuable knowledge about the neighborhood, handle negotiations, help you submit a competitive offer, and so much more. Even if you don't personally work with me, definitely make sure you find a trusted realtor. You can do this by asking your friends and family for recommendations or looking online at reviews. Many home buyers think that after paying your mortgage and property taxes that you're all set. Well, that's not quite true. While that is the bulk of the money that you'll be paying on a monthly basis, it's not the whole sum of it, and let's break it down. First off, we have the hidden costs of buying a home. And honestly, they may be multiple depending on what type of property you're buying, what state you're living in, and what loan type you have, and so on. But here is the bare minimum you should expect to pay. Appraisal fees, which is ordered by the bank to assess the property's market value. This typically costs anywhere from $300 to $600. Optional but recommended home inspection fees, which typically cost $300 to $500. Next, closing costs, usually 1 to 3% of the home's value. And this is basically used to cover the expenses to finalize a home purchase, such as loan origination, title insurance, and taxes. And finally, moving expenses. This can vary depending on your situation, but it's something to factor because moving into a new home can be expensive. Secondly, we have hidden costs of owning a home. Some of these costs include homeowners insurance, which is on average $1,000 per year, but can vary greatly depending on the property type and what state you live in. Private mortgage insurance, which is only applicable if you have an FHA loan. And finally, flood insurance, which also depends vastly on what state you live in, how close you live to the water, and the property type. So with that being said, it's important to keep in mind the full cost of ownership. So you finally bought a house. What should you do? Now that you're one of the 60% of Americans with a mortgage, I highly encourage you to pay it off as soon as possible. And here are a couple tips. Make extra payments toward the principal balance whenever possible. This will help you save on interest over the life of the loan. And make sure your extra payments are going towards principal and not the next payment. Banks make this extremely complicated because it works in your favor and not theirs. Even an extra $200 a month on a $500,000 loan can help you save almost $100,000 in interest over the life of the loan and make you pay off your home 4.5 years early. It's crazy just how a little bit goes a long way. My second tip is to get creative. There's multiple ways you can find extra money, whether that's selling stuff in your closet that you've never used in a long time on Facebook Marketplace or eBay. Putting that tax return or bonus towards the principal balance can have a huge impact on paying off that loan. And the last tip is that you have to be really intentional and aggressive with paying off this loan. Some sacrifices have to be made, but the peace of mind you will get after owning your home outright will be truly rewarding. 1. Emergencies and job losses happen. Save a 6-month emergency fund separate from the housing transaction in a high-yield savings account. My personal favorite is Wealthfront, link in the description below. 2. Ask about recent replacements of big-ticket items like roofing or AC. A lot of people may not think about this, but replacing these items can cost you a lot of money, and it's best you be prepared. 3. Don't max out your budget. Just because you got pre-approved for $800,000 home doesn't necessarily mean you have to get one. You have to look at your financial situation and look at a mortgage payment that you can comfortably afford. 4. Avoid being house poor. Experts say that you're not supposed to spend more than 35% of your pre-tax income on your mortgage alone. This is important to consider as your mortgage isn't the only thing that you're going to be paying for. You have to think about utilities, home insurance, food, trash. There's a lot of things to think about, and you just don't want to be house poor. 5. Enjoy the process. Do your research. Ask a lot of questions. Home buying can be extremely stressful, but it's also very rewarding. Thanks for watching the video. Please consider liking and subscribing. It really helps out the channel. And if you have any tips or advice on buying a home, feel free to drop them in the comments. Also, if you're interested in buying or selling a home in the state of Massachusetts, shoot me an email. I'd love to connect with you. Bye for now.